And welcome back to another episode of Interactive Wednesday. I'm your host, Financial Bridging. If you are here to level up your financial literacy and make smarter investment decisions in 2025, then you're in the right place. So disclaimer, before we get started, I have to give you the disclaimer. Remember, this presentation is for educational purposes only and should not be taken as an investment advice. For investment advice, please speak with your financial advisor. I'm only your financial brethren. All right, so today we'll be diving into the highly anticipated initial public offering, or IPO as we call it, of Atlantic Hardware and Plumbing Company Limited. I know, a very long name. So we'll be breaking down the company's financial health, explore the investment potentials, and also discuss whether this opportunity aligns with your financial goals. So whether you're a seasoned investor or just getting started, this analysis will help you with the necessary information and serve as guidance to make an informed decision. So before we get into the details, just make sure you like, share, subscribe, and follow the Financial Bridging on TikTok, Instagram, and YouTube for more financial tips and analysis like this, because we drop very comprehensive analysis from time to time. All right, let's jump right in. Now, we'll be covering the following: the company or the IPO overview, the financial performance in terms of the balance sheet, income statement, cash flow statement. We're doing an overview of that, and also market and competitor analysis, right? Valuation and investment potential. And closer towards the end, I'll be giving you a recommendation and also conclusion. All right. So let's get started by getting familiar with Atlantic Hardware and Plumbing Company, or simply Atlantic moving forward. So if you hear me referring to it as Atlantic, it's the same IPO, one and the same. Understanding the company's leadership and track record is key, firstly, in assessing this company's ability to achieve its strategic objectives. Cool? So with that said, the company was founded in 1994. That's Atlantic. It has over 30 years of experience in Jamaica's hardware and construction industry. Now, the company offers a wide range of products, including plumbing supplies, building materials, pools, doors, flooring, paints, adhesive, and even lawn care products and garden supplies. Now, serving both residential and commercial needs, Atlantic Hardware has been around for 30 years. In terms of its customer base, Atlantic caters to a diverse group of customers, including hardware stores, contractors, real estate developers, and everyday consumers like you and me. Now, with over 1,000 repeat customers, the company has built a strong relationship with its customer base, creating a stable and consistent revenue stream for itself. Cool. In terms of strategic acquisition, in March 2024, last year, Atlantic was acquired by Construct Group. Why this is important, you might be asking. Being a part of a larger group can provide greater financial stability and increase resources and opportunities for expansion, which could also enhance operational efficiency and future growth. Now, some takeaways that I would have found in the prospectus is, with its solid foundation and strategic backing from the group, Atlantic is well positioned in the market. However, the real question now is, do the financials support this potential? So let's take a deeper look at numbers before we can answer this question. And before we get into the numbers, of course, I have to peel back the layers of the management team, because you want to know who is behind the company, right? And of course, the financial bridging, I got tell you what I want. Now, in terms of the management overview, Atlantic is led by a very distinguished team of industry professionals. I'll tell you that, bringing extensive experience in business leadership, finance, and strategic growth. At the helm of the company is Paul B. Scott, who served as chairman. Now, he is also the chairman and CEO of Musson Group, if you're familiar with that company, and has played a key role in shaping Jamaica's business landscape. Yeah, man. And one of them, man, that has been around for a very long time and has done great things. Now, guiding the company's daily operations is Dinal Barnes, and I hope I'm pronouncing this correctly, the Chief Executive Officer, or CEO. Now, with a strong background in accounting, law, and corporate management, he has been instrumental in driving Atlantic's expansion. Among the key figures on the board of directors is also Jeffrey Hall, now the chairman of Lumber Depot and CEO, of Panjam Group, whose extensive experience in finance, logistics, and business strategy strengthens Atlantic's corporate vision. Cool. Now, supporting the operational management is retired Major Noel Dawes, right? JDF Business Now, the managing director of Lumber Depot. He also brings both military precision and decades of hardware industry expertise to the company. Now, in terms of financial governance and corporate compliance, you might be asking, those are overseen by Lisa Kang, who serves as both the director and company secretary, ensuring regulator alignment and also financial integrity. It's a big thing in corporate governance. Also contributing to Atlantic's growth is Donald Fong. Now, the company's founder and CEO, right, is Donald Fong, whose key industry knowledge continues to shape its strategic direction. Further strengthening the board is also Sharon Donaldson. She's a chartered accountant and corporate leader with expertise in insurance, financial management, and regulatory affairs. Additionally, is Sekou Crawford and also Alexander Marston, both group project managers at the Mossen Group. Now, they provide crucial oversight in mergers and acquisition, or M&A, and also investment strategy, aligning Atlantic financial goals with long-term growth. Now, with this experienced leadership team, Atlantic is well positioned for sustainable growth and also operational excellence and long-term shareholder value. Right, that much I can say. Now we're gonna get into the IPO a little bit. I'll give you some details. You might be asking persons here for the first time, what is an IPO? So an IPO, or initial public offering, is when a private company offers shares to the public for the first time. This allows the company to raise capital and give investors like you and me an opportunity to own a piece of the business. The offer period, I should tell you, the IPO was opened on February 27th of this year, yes, and it closes March 13th. At the time of this video, it's actually tomorrow that the IPO will be closing. Now, these dates are important because once the offer closes, you can only buy the shares through the stock exchange. At your broker, of course, you need a brokerage account, and those will inevitably sell for a higher price. Now, shares and pricing, the company is offering 499,999,800 ordinary shares at a price of $1 per share. You do the math. Now, ordinary share gives investors ownership into the company, as I said before, typically voting rights at the annual general meeting. In terms of evaluation, based on the prospectus, with the share price and the total shares being offered, the company's valuation comes in at approximately $1.95 billion in terms of valuation. That's what was stated. Now, valuation is pretty much like a price tag for the whole company. It's how much the managing director team think that the company is worth, right? And also, of course, with the guidance of their brokerage that is bringing the company to market. In terms of subscription details now, they say that investors need to subscribe to at least 1,000 shares to participate. Yeah, one blue face. That is what you need. And that's an initial investment of $1,000 with additional investment in multiples or increments of 1,100 shares. I correct myself. Now, the use of the proceeds, the estimated net proceeds of 469,999 are counted for things like expenses of around 30 million, right? Now, these funds will primarily be used for like debt repayment, right? And when we say debt repayment, they have some massive debt to repay. The company plans to use 300 million of the funds raised to clear one significant debt and then distribute 56.67 million each to clear three smaller tranches of debts. So that just gives you a perspective of the amount of debt that they're planning on clearing. In terms of covering expenses that I mentioned earlier, the remaining funds will cover expenses such as professional fees, and I'll get into what professional fees are right now. Now, these fees are payable for like professional advisors, like your legal team, auditing team, tax experts, and accounting fees, of course. And other fees would include those payable to the stock exchange, JSE, and also JCSD. And lastly, they'll be paying like regulatory fees, right? And also covering some marketing expenses. Cool. So those are what the funds will be used for. In terms of a discount, the IPO of $1 per share is what is being offered, right? And based on the valuation of the company, that's around, they're coming to market at around a 25.37% discount, right? So this means that investors buying into the IPO are getting a potential upfront discount of 25% compared to what the company is actually worth. Now, why this matters? By repaying its debt, the company aims to improve its financial health, reduce interest expense, and also increase profitability. But as always, we need to estimate whether the projected benefits align with the company's current financial position. Cool. So with that said, we're going to peel back the layers and jump into the numbers. Okay, so we're starting out with the balance sheet highlight. Now, a balance sheet, if you're asking, is it gives a snapshot of the company's financial health, right? At a specific point in time, it lists what the company owns as assets and owes as liabilities, and the net worth of the business, meaning the equity now. Cool. Now, in terms of total assets, now, as I said, from a balance sheet perspective, as of 2023, Atlantic has a total of $1.85 billion in assets, reflecting a 7.6% increase from 2022's 1.72 billion. Now, assets including cash, inventory, property, and other resources that contributes to the company's value. In terms of current assets, the current assets which can are those assets which can quickly be converted into cash within a year, stood at 1.69 billion, growing by 8.3%, right, from 1.65 billion in the previous year, 2022. Now, notably, cash reserves were only $426.5 million, and that was up by 26.2% from 2022's 338 million. Now, the strong liquidity position is very crucial for meeting short-term financial obligations. And also from an inventory perspective, inventory increased to 821 million, representing a 5.5% rise from 2022's $778.5 billion, where higher inventory ensures that the company is well stocked. It can also tie up its cash reserve if sales fall short. From a liabilities perspective, the current liabilities stood at 339.3 million, marking a 3.8% increase from 2022's 326.8 million. So these are short-term debts and obligations due within a year, right? Now, in terms of non-current liabilities, this total $118 million, down from 6.1%, and this was compared to 2022's $126.5 million. Now, this lower long-term debt reduces interest expense and also refinancing risk, making the company less vulnerable to rising borrowing costs like interest rates and stuff like that. Now, in terms of shareholders' equity, the company's equity rose to 1.73 billion, reflecting an 8.8% increase when compared to 2022's 1.56 billion. Now, equity represents a shareholder's stake in the game after all liabilities are settled, and a strong equity position indicates financial stability and also a lower leverage and a greater ability to absorb any potential losses that the company might have. Why I'm telling you this? Atlantic Hardware has a solid balance sheet with strong liquidity and a manageable level of debt. This could be a good sign for investors, especially if the company uses the same IPO proceeds that we discussed to further reduce the debt load. Now we're going to go into the income statement, very highly anticipated. So let's dive into Atlantic Hardware's income statement, focusing on key financial performance over past 2 years. So revenue in 2023, right, as the prospectus reflects, the company generated a total of 1.44 billion, which reflects a 14.3% decline when compared to 2022's $1.68 billion. Now, revenue represents the total income from the sales of the products that they sell before any expenses are deducted. And a decline in revenue may indicate reduced sales volume, potential market loss maybe, or also shift in customer demand. And it's also important to analyze whether this is due to like external market conditions, also economic factors and stuff like that. And also we have to consider like increased competition from other hardwares, right? Or other external ways of getting the same supplies, or even just internal inefficiencies could be a factor. Now, in terms of operating profit, the operating profit stood at $122 million in 2023, reflecting a 28.7% decline when compared to 2022's $171 million. Now, the operating profit is the profit that the company earns from the core business activities that it does, right? Excluding like expenses related to financing and taxes. The reduced operating profitability suggests here that there might be challenges in managing the operating costs or generating sufficient sales to cover the expenses. Now, this could be an area for management to focus on, potentially by improving the operating efficiency or just adjusting the pricing strategies that are in play. Now, in terms of net profit or bottom line, as we call it, the net profit of the company is what remains after all expenses, including taxes and interest, are deducted. And this was $105 million in 2023. And this is a 51.8% decrease from 2022's $218 million. Right? So this was a very sharp decline, and it indicates that there's a need for better cost management, and also this potentially points to higher expenses or lower profit margin as it's obvious, right? Now, in terms of investors might be needing to investigate this some more, right? Whether this is a temporary issue or this is a one-off case or part of a long-term trend affecting the profitability of the company, right? So prudent investors might want to investigate this. Now, other income. There was no gains from fixed assets disposal or extraordinary items in 2023. Those one-off balance sheet and income statement items, none of that. Other income typically includes non-core earnings such as interest income or profits from selling assets. So the absence of these gains suggests that all income generated came solely from regular business operations, emphasizing the importance of enhancing the core business performance to drive future growth. Now we will segue to the cash flow statement. Now the cash flow statement is crucial as it shows the actual cash available to the business beyond just profit on paper. Cash flow is segmented in three main activities, and those activities are operating, investing, and financing. As it relates to the operating cash flow, Atlantic Hardware operating cash flow in 2023 was $97.8 million, right? And this was a 203.7% increase from 2022's $32.2 million. Now, the operating cash flow reflects the cash generated from the company's core business activities, which I stated earlier. We all know what hardware provides. A positive and improved operating cash flow is a very good sign, right? So this shows that the business is generating enough cash from its day-to-day operations to support expenses and also potential investments. Now we'll go into the investing activities. The company had an outflow of $162.2 million from investing activities, and this was a 46.9% increase compared to 2022's $110.4 million. Now, investing activities include spending on fixed assets, property, and also equipment, as well as income from selling assets, right? Now, the increased outflow was driven by lease liabilities and also acquisition of fixed assets, indicating that the company is investing in its infrastructure, which also can lead to future growth, even if it impacts the short-term cash flow, right? So it's nothing to be concerned about. Now, in terms of financing activities, from the financing activities section, the company generated a whopping $172.7 million, marking a 30.4% increase when compared to 2022's $132.4 million. Now, the financing activity involves things like cash flows related to debt, equity, and also dividend. The positive cash flow here in this section was supported by lease liabilities and also loans, showing that the company raised funds privately before coming with the IPO, likely to support its operations or strategic investments. However, it also means that the company is taking on more financial burden, more financial obligations, and this could increase the financial risk for the company, right? So that's why it's coming to market to shed some of these debts to continue its usual modus operandi. Now, the cash position of the company, right? Atlantic Hardware ended 2023 with a very strong cash position of $426.5 million, reflecting a 91.8% increase when compared to 2022's $222 million. Now, the liquidity refers to the company's ability to meet its short-term obligations without having to finance same. Now, strong cash reserve would suggest that the company has flexibility to handle any unexpected expenses and also capitalize on investment opportunities. Maybe they could buy or acquire a smaller hardware, and also to provide a cushion in challenging times, maybe another COVID-19, you never know, right? So these are things we have to consider. Now we'll have to go into the key ratio performance, right? Key ratio performance is what's coming up next. Now the financial ratios help to assess the company's financial health by comparing different parts of the financial statement, the income statement, the cash flow statement, and also the balance sheet. So with that said, we're going to explore some key ratios. Now when we compare Atlantic Hardware's financial ratios to industry standards, it helps to provide valuable insight into the company's performance. So with that said, here are the analysis of some ratios. Now, in terms of liquidity ratios, the current ratios of Atlantic Hardware is 4.98 times, indicating a strong long-term financial health. While the specific industry average for hardwares is not readily available, I'll tell you, the current ratio by industry standard should be around 2, right? And with that said, Atlantic Hardware is doing very well as it compares to its current ratio, right? Now, in terms of a quick ratio, that stood at 2.57. Now, the quick ratio would suggest that the company is very liquid without having to rely on the liquidation of its inventory. In terms of industry standard, that should be around 1. So if they're at 2.57 times, that again is a good indication of the quick ratio. Now, profitability ratio, specifically net profit margin, Atlantic's net profit margin was 7.32. Now, for context, the building material sector has an average net profit margin of around 10.8. So while the retail, meaning the building supply and all this, that sector averages at 10.9%. This comparison suggests that Atlantic's profitability is just a little below industry standard, but not too far. Good. In terms of efficiency ratio, the inventory turnover ratio was 1.58 times. Now, Atlantic's rate here is lower than the industry standard, where a higher turnover ratio would have been more desirable, right? So here's something that management team needs to work on. In terms of a leverage and return ratio, the debt to equity ratio of Atlantic stood at 0.19, indicating a very conservative debt usage. So while industry standard vary, anything below 0.5 is generally considered very low, right? So this suggests that Atlantic needs to strengthen this area, right, in order to have a better debt to equity ratio. In terms of a return on assets or ROA, and also a return on equity ROE, Atlantic ROA was 5.7%, and also its ROE was 6.1%. So these figures are lower than industry standards. For example, Bonin, a company out in Australia, hardware, reportedly achieved a return on capital of 69%. So that's what's possible, right? So here are some metrics that the management team need to strengthen coming out of the IPO after the proceeds have actually been used, as I said, to repay debt. Now, Atlantic, as I said before, exhibited strong liquidity and also a conservative debt management. However, its profitability and efficiency metrics lag behind in industry standards, indicating areas, as I said, for potential improvement in operation and also cost management. Now, from a performance summary perspective, some strengths are that they have strong liquidity, that much was indicated earlier, and also low financial risk due to conservative debt management. Some challenges would be lower profitability, slower inventory turnover, and also reduced efficiency. In terms of an outlook, I would say the IPO's debt management strategy is expected to improve the financial stability and also to improve the profitability by reducing interest expense, and this would enhance the operational efficiency of the company. Understanding the market environment and also the competitive landscape is very vital for evaluating any company's growth potential and what they say that they will deliver on from a strategic objective perspective. So with that said, we're going to segue to the market and competitive analysis. So we all know that the Jamaican DIY, meaning do-it-yourself and hardware store market, is well positioned, and it is projected to generate approximately US $670 million in revenue by the end of 2025, growing at a compound annual rate of around 2.27% from 2027 onwards to 2029. Now, this, along with steady growth in the real estate and construction sectors, highlights strong market demand for home improvement and also building materials. So this reinforces Atlantic's position for growth. Now, the top competitors of Atlantic Hardware, you might be asking, are Lumber Depot. So this specializes in lumber and construction materials, catering to contractors and also the everyday do-it-yourself customers. Now, another competitor on the list is Hardware and Lumber Limited, and this specializes in hardware and retail building materials, offering a competitive edge through its wide range of products. And third on the list would be Arc Manufacturing Limited. So it's a major player in the manufacturing and distribution of construction materials, including steel, roofing solutions, cement, and lumber. Right now, some opportunities and challenges. As relates to opportunities, the rising demand for home improvement and construction materials, fueled by the housing development and also infrastructure projects, creates an opportunity for market expansion for Atlantic. And some challenges I see would be the fluctuating material costs and also the high import dependency and the potential regulatory challenges or changes in building codes, and also this might impact profitability and operational efficiency going forward. So with that said, we're going to segue to the valuation and market positioning section. Now, in this section, we'll be analyzing Atlantic Hardware's valuation and also the market positioning of this company, providing insights into its investment potentials. So this is a section that you should be paying attention to. From a valuation metrics perspective, we'll dive into the key valuation metrics in a way that helps you to better understand what's going on when we say what the company is valued. So with that said, we'll first look at the price to earnings ratio, or PE ratio for short, which helps us to see how much investors are willing to pay for each dollar of profit the company earns. Now, at its IPO price of $1 per share and using the net profit data from the income statement, we estimate that an earnings per share of the company is around 0.054 cents, right? So this gives us a PE ratio of 18.52 times, meaning investors are valuing the company at about 18 times its earnings. Now, this is on the higher end compared to the industry average, which could reflect strong growth expectations of this company. Now, with that said, we're going to look at the price to book ratio or PB ratio, which tells us how the stock price compares to the company's actual net assets from the balance sheet. So using the balance sheet, we found that Atlantic Hardware's total shareholders' equity is about $1.73 billion. Now, when we divide that by the total post-IPO shares, we get a book value per share of roughly 0.31, right, or 31 cents. Now, with the IPO price of $1, this would give us a PB ratio of 3.27 times, meaning that the stock is trading, or will be trading at a little over 3 times the net assets of the company. This suggests that investors see strong potential beyond just the company's current assets. All right. Another metric that we'll be looking at is the enterprise value to EBITDA ratio, or EV to EBITDA, which helps to assess the company's value compared to its core earnings. Right. So to calculate this, we first have to determine the enterprise value, and this will help us to get another valuation metric. So this includes like the company's market capitalization, such as the total debt, cash reserve from the balance sheet. So here we'll see, after repaying the $300 million from the IPO proceeds, Atlantic will have about $158 million in debt and also $426 million in cash, if we're just using the information we're presented with from the income statement and also the cash flow statement. So factoring these into the market cap of $5.67 billion, we get an enterprise value of $5.4 billion. Now, since the company didn't explicitly report EBITDA, we estimated it to be adding back the depreciation and also the amortization to the reported operating profit. Now, from the financial, the operating profit was $122 million. Based on industry benchmark, we could estimate the depreciation and also the amortization at around $370 million, giving us an EBITDA of approximately $492 million. And this, when you divide this out now, the enterprise value by this figure, we get an enterprise value by EBITDA of 10.98 times, which is well within the typical range for hardware and retail sector. Good. Now we're gonna segue into, so here we can see really a wide gap in the valuation, and of course we can average it out, right? We're gonna segue into the market position and also the investment highlights. So from a strategic standpoint, competitive IPO pricing standpoint, the IPO is priced at $1 per share, which aligns well with other IPOs that would have came out in recent times, right? Post-COVID, pre-COVID, right? And it aligns well with the benchmarks of IPOs that would come to market, and provides an accessible entry point for investors, since that's the typical price point at which the IPOs will come in at. Now, from a growth potential and risk factor perspective, the company has strong liquidity, as I highlighted many times. And this is reflected in its current ratio of 4.98 times. However, profitability has been declining, with the net profit margin of 7.32%, signaling a need for improved cost management and also revenue growth. Now, financial stability post-IPO, the debt to equity ratio, as I said earlier, currently stands at 0.19 times, a low risk level, and this is expected to improve further after repaying the 300 million in debt, right, following the raising of the IPO funds. Now, this will strengthen the company's financial position and also reduce the interest obligation, and this will enhance the long-term profitability of the company. So while the company exhibits strong fundamentals, investors should be mindful, very demure, of the decline in earnings trend and the pace of the inventory turnover. Now, the IPO proceeds are expected to enhance the financial stability of the company, as I have constantly been driving home the point, but future profitability will depend on the strategic execution and also the operational efficiency of the management team, right? Which is why I went through the many members that they have and their capabilities, right, to drive home the strategic objectives of the company. Now, in terms of recommendation, some pros are strong reserves and improved liquidity. Also, the potential for dividend return at a policy of up to 40% payout, right? It's a good sign. Some cons, though, are the decline in revenue and also net profit, signaling potential challenges. And there's also the con of increased liabilities if left unchecked. In terms of investment strategies now, short-term investors should approach cautiously. It's coming from the financial bridging due to the potential volatility and also the short-term profitability concerns which I've highlighted throughout the presentation. From a long-term investor perspective, you might want to consider buying and holding, right? If they believe that the company's strategy and also that the market will recover, right? So that's for long-term investors, right? The numbers are here. I would have presented them. So to wrap up, the Atlantic IPO presents a mixed investment opportunity. The final recommendation is for short-term investors to consider participating, while long-term investors might find potential value in buying and holding, right? Provided by the numbers I've shared with you, and also the fact that the company's strategic direction and its prospective growth is well positioned and believed to be backed by a strong management team. The numbers are good, and I hope the numbers will continue to be the same after the IPO closes. With that said, if you have enjoyed this presentation, I want you guys to like, share, subscribe, and follow the Financial Bridging for more financial tips and also analysis at Financial Bridging. You can follow me on YouTube, TikTok, and IG. Until next time.